There was an earlier tax session which was supposed to be here, which we moved to the main hall, and which is why there are some people who are still straggling in from that side to here. Can you hear me okay? Okay, good. This is going to be reasonably interactive. It is called the Experimental Theater. So we can try whatever you want. Feel free to raise your hands or shout and scream, whatever you want to do. It's a small enough group to be able to do that. Let me quickly start with a quick introduction of myself, and then I'll tell you who the gentleman on my right is. My name is Vikram Sood. I've been connected with TiE in Singapore for many years, and then I moved back to India a couple of years ago, and I thought I'll duck away, but the TiE Mumbai guys found out, so I got roped in here. I'm a charter member, and I'm on the board. And this year, I think we are trying to do a lot of stuff and be fairly active, and hopefully we're doing a good job of that. Any feedback on what TiE should do better, TiE should do differently, I'd be happy to listen after the session. And if it's constructive, it would be pretty useful because we run the organization pretty much for you guys. My name is Vikram Sood. I spent 30 years at Citibank and Kotak. In India, in Asia, and in the US, and moved back from Singapore here a couple of years ago, as I said. Since then, I've been investing a little bit, consulting, mentoring startups, and doing some consulting to keep the kitchen going at home after losing a healthy salary that you can expect one got from Citibank for a while. And in the bargain, have learned a lot. So in the last 3 years since I left the bank, I've kind of learned probably as much as I learned in the 30 years, especially working with smaller companies and younger people. Let me move on to the topic. It's basically trying to learn from entrepreneurs and try to figure out how we can help them in any way that is possible. To my right here is Sridhar. Most people in the industry know him. If you don't know Sridhar, you certainly know Shrirams Transport Finance. And if you think of Shrirams Transport Finance, this is probably the only name that comes to mind. He joined way back in the mid-'80s, 85, I think. We both started our careers around the same time, same year. Of course, when I joined Citibank in 1985, there wasn't a computer. So it was a completely different situation at that point of time. And Sridhar, we have some other things that are in common. I also am not an engineer or a techie. I did my bachelor's and you did science, I did commerce. You are a chartered accountant. I'm similar in the sense that I did my articles and I failed my exam several times. So I have a lot more respect for you. So I'm a CA fail while he's a CA pass. Except you probably did the exams only once, right? That's the difference. I did it 2-3 times and still didn't get through. So I studied the material more often than he did. So in the years he was there, Shrirams grew tremendously, and they were pioneers in many ways. I mean, there's probably nobody who owns a truck who has not heard of Shrirams Transport Finance. They pretty much created the whole category in India. I remember even at Citi, there was a time when there was a gentleman called Ajit Riker who pretty much tried to copy and do things that you guys were doing, and we started a small business. It never scaled like you managed to do. While Sridhar was CEO from 2000 onwards till about 2012, the company grew hugely. It was a market cap of about 20 crores when you joined, and 20,000 crores when he finished. So if you talk about multi-baggers, unfortunately, he didn't own a lot of the company himself, so he figured that he has to do this all over again. The AUM grew from 5,000 crores to 40,000 crores during that same time. So clearly, Sridhar knows how to build businesses. And again, he's now, of course, in between was with TPG as an advisor, as a senior advisor. And then now he's the CEO of Indostar, which is a new NBFC that has just been recently funded. A couple of years and already showing lots of growth. If you read the newspaper yesterday, they made a fat acquisition, and they were suddenly 50% bigger in one day, right, because of that. So this is more about him than me. Sridhar, do you want to just spend a few minutes, do any other part of the introduction of yourself or any other thoughts before we kept going?
I think you have covered.
Covered it all? Okay. He also has two kids. I asked him about them. And while he was saying, I'm very traditional, I'm not a tech entrepreneur and whatever, I said, most people here would love to get your kind of growth. It doesn't matter whether there's tech or no tech, for sure. But he did tell me that his son is an entrepreneur, and he has recently launched a app-based business that's related to car and bike repairs, maintenance, using an app. So clearly in the family or at the dinner table, you have enough of that tech influence that goes on in your life, right? Excellent. So I'm going to just try to structure this very loosely and try to get from you, in your early stage, when you grew in those days, what was a small company to a very big company, what are the few things that you kind of, now when you step back and think you did right, what did you not do right, what would you do differently, and basically things that a lot of these budding entrepreneurs would be able to learn from that, if you can share some of that with us.
So our business was a little bit peculiar, where in the road transport industry, we were the only company which has been funding the first-time buyers. So today when you lend money, you have so many technological support you get, including the credit score. So you put the name of a person, then you get a credit score. So that becomes the base for you to take a decision whether to lend or not lend. But a person who has never borrowed in his life, whether you have technology or not, doesn't matter. So when we are today talking about technology being used, FinTech being used to lend money, we did the business on relationship-based. Because the trucker who is just one truck owner, who buys the first truck, that too second-hand vehicle, so there is no way you could reach him. So we have created people who develop relationship with them. And then, so this combination of lending to someone who had never had any credit track record and a second-hand vehicle which has a valuation which is very subjective and relative, where we decide the valuation. The market didn't approve our model for nearly 20 years. So when we started from 1979 to till 2000, we didn't get even an investment grade credit rating. Mm-hmm. So that was the perception which the market felt, that we are in a very, very risky segment. Because in the West, where we are learning a lot of things from the West, is whenever your interest rate is high, then that customer is called subprime. Mm-hmm. So here, the interest rate is high in my segment because it was the gap between demand and supply. There is a huge demand from these people, and there is no supply because no one was ready to lend. And you will be surprised that today we are in 2019, which is 72 years after independence. Nobody is ready to fund that segment except Shriram Transport. So that's the situation where we took a small niche segment of the economy, which is very, very critical to the GDP, because the truckers support the movement of goods from one place to another. And in our country, fortunately or unfortunately, the small truck owner forms 70% of the population. So ownership of trucking is fabricated. So we were up against a perception, a mindset in the marketplace that what we lend is risky. So it took about 20 years. When I became the CEO in 2000, when we were 20 crores market cap and 3,000-4,000 crore of asset, with a lot of struggle, it took 20 years. I only changed the mindset of from subprime to niche, unique, and then the advent of private equity into this country, where they were looking for different stories, unique stories, which can be scaled. So we got into that radar, fortunately. And then a lot of money was chasing. Before that, to find 5 crores to lend money, we were struggling. Then it became too much. We had 5,000 crores and not able to lend money. So we innovated products, and so that's where the growth came.
Everybody here is hoping to be in that situation.
Yeah, so in an entrepreneur's journey, you devise a model, you have a product and you believe, you have a conviction that it will work, but it may not work for 20 years, 25 years. But the entrepreneurs, keep continuing. They have the faith in their perception and conviction. But suddenly one day...
I'm wondering if the millennial entrepreneurs are going to be as patient as you were.
No, it may not. I'm talking about my generation. So suddenly you take a hockey stick. So it takes a U-turn, and then its mind-boggling result comes. Because in my experience, it's only the business, even today, in that company I have left about 7 years back, but it still remains. But the mindset of the other people have changed. That we brought about that change, and once that change happened, then there was no stopping of that company. So that was a great learning for me and great experience. And after moving to this company, again, I'm doing the same business. In a small manner, we have started from zero. It's zero, and I thought in 5 years...
Before you go to the new business, so the mindset change that you did, what did you do? Because you weren't just doing the mindset change of people in the company. You were changing the market. You were changing the investors, and you were changing the whole mechanism. So was there a conscious... Naturally, when you became CEO, you started doing something different.
Yeah.
What would you...
Yeah, I only had a strong operating head for me. So I told him that you focus on lending and collection. I'm not going to. So I will focus on the liability side. Because for my company, asset side was very strong. We have been doing it for 20 years, but market didn't accept that model. But we know how to do it. So we continued that. Then as a CEO, I focused on the liability side. So I spoke to investors throughout the world, and then I spoke to the analysts, I spoke to the lenders, I spoke to the bankers, mutual fund. So continuously, I did it for 2 years. Then the whole thing changed.
But of course, you were also delivering
results,
because otherwise, people could have done that before.
Consistently, results were growing, but at the same time, mindset is very strong, unless the conviction comes. So people who have been talking about that you have been concentrated in a particular segment, they said you are a niche player.
Right.
That's the mindset change.
But niche in a pretty large market. Also, most of us at that time would wonder as to how you managed to get credit performance of the kind that you got. And we all knew that it was relationship oriented, and you had people who kind of knew who the trucker was, what he does, and all of that. And that was the way to do it at that time, because there was no digital footprint of any nature.
Yeah.
How did you build that network, and what lessons or what would you sort of advise people in the room?
Today the digital has come. Those days my customers had not even banking habits. They had bank account, but there was no banking habit. It was completely cash. I'm talking about prior demonetization. So our people will go and collect every month. So we had, at the time I left the company in 2012, we had 1.2 million customers. And that 1.2 million customers, every month we will go and collect.
Oh.
There is no post-dated check, there is no NASH, there is no digital collection.
Well, there's a lot of digital lending people here who complain about that those processes don't work very well. But with 1.2 million customers,
we go every month and collect. And that gave us an opportunity to be in touch with the customer. That's a model, it's a cash model. It's too difficult to replicate.
And so, were all these people in the network employees, or they were like an extended workforce? How did all these people, and how many people did you have to?
I had about 17,000 people in the company, and all were employees. There is no off-roll. They were all on-roll. And attrition used to be very low. It's not because people liked our company and stayed, but because they were in a niche business, they had no market value outside the company. So they all stayed. I myself stayed with 30 years, and I didn't get any job offer outside during my period. So I left, and then I was in a private company. Then I got the job where I am now. So I'm talking the real fact.
Excellent. So from that period, if we can sort of stay there a little bit, in terms of culture, systems, processes, were there things that you did that were different? Because naturally you were in a different business, in a different market. But was there something different that that we can learn from? And because you were there pretty much from this. When you started
It's completely people related. And as we were growing, we developed our technology and all that everything in-house because it's a very unique business. There was no model available in the marketplace from Infosys or TCS or something like that. So we developed on our own, but frankly, we didn't rely on technology. Our technology, our GPRS was human beings, and that's how we did the business. But the same business I'm doing today with a lot of technological support, because era has changed. I'm talking about an era which is 15, 20 years back. But now, technology, without technology, you cannot do anything.
Right. And so apart from the funding that you got from an equity point of view with people chasing you to do whatever, how did you go about raising money from the market? Because you naturally also got, you built the debt or the liability side of the book pretty significantly. And those were pretty traditional markets and traditional players in those days. There wasn't a whole bunch of NBFCs and aggressive NBFCs. How did you sort of train those people or convince those people, because they were taking naturally a lot more risk and had more, there were several more players other than the few investors that you had. From raising debt.
Lenders.
Lenders. When you raise debt in Shriram.
See, there were 2 periods when nobody wanted to lend money. So that's the time we worked for Citibank. The name we took Ajit Raikar. So I went to Ajit and told him that you have money, I have capacity, can we work together? I don't have money, I know how to lend money. So Citi had the aspiration to build a CV business, and I had a unique segment. So we became a partner to Citi, and I used to work for Citi for a fee. And you know how difficult it is to deal with Citi. It's completely process-driven company. Human beings are not, matter. It's a system which matters. And on the other side, we were not much worried about technology or system or process. It's completely dominated by human beings. So to put these two together was the most difficult task. But we had no alternative because my capacity was there. It was idle because no money, no raw material. So we worked for Citi. And with Citi, I did new vehicles on their balance sheet. So they were giving the money. I put only 5% or 10%. Then I was generating used vehicle business, which Citi didn't want to do because it was complicated. Then we created what is today very, very famously known as securitization, portfolio sale. I was the innovator of that.
I was going to come to that because that was something that you...
So I bunched a portfolio and told to Citi. So Citi liked it, They were growing the CV business because of Shriram. And we were putting 10%. So the 10% also dried up because we grew very fast. Then I went to Citi and said that year after we cannot do business for you unless you give me equity. So Citi gave me equity in 2002. And that changed our brand in the marketplace. Citi put only 17 crores. Those days with the dollar money, it was $4 million. But it went to US, to the top man. That time it was Charles Prince was the
Chuck Prince.
Chuck Prince. So he approved it. So for $4 million, it went to US. So that was the U-turn for Shriram, where Citi's investment, it changed. Once it came, then we went and convinced the lenders, the nationalized banks, the private banks and foreign banks. All of them have started giving. But the one which I marketed was that all the customers whom we have funded were fortunately classified as priority sector by the government. So priority sectors, banks had the target. So we were easily able to, sell.
So this was a good match because there was a deep requirement for...
Requirement and I had. So it's at one point of time, the business model, the customer, the asset which you fund were considered risky, untouchable by the marketplace. Overnight, over a period of very short time, they all said this product is gold. Keep giving me. You produce and give, I'll give you money. So it changed overnight.
I guess there's a lesson about sort of hanging in there and finding the sort of, as nowadays people call it, a way to pivot so that you get more relevant. either to the customer or, in this case, to the market that needed these assets. But what was interesting, and I think when we were asking Sridhar to come here and speak, was many people in his situation, after doing what they did, would say, maybe I should chill and relax and be an advisor and do a whole bunch of things like that. I'm a golfer, and he just told me that he lives right next to the Chembur golf course, and I would have figured that that's what you should do for the rest of your life. He has now gone back to building a company pretty much from scratch. Naturally, you have a sizable stake, not just from a money point of view, but you're pretty much going to be the founder and the person who will build it. And clearly, I'm sure there was a race of people wanting to put money in it, given that they knew you were going there to do this. Your reputation is huge in the market. So clearly, you've given that up, and you're going to have to work really hard, and you've naturally signed up to do that. And as you said, you know no other way to do it. So just two aspects broadly on that. One is, of course, why did you want to go back to do something like this? And then we can talk about some of the stuff about what is the new way of building a business different from what you did earlier. But first, why did you want to do this?
Yeah. So, we were all influenced by, our mentor in Shriram, Mr. Tyagarajan. He's 82 and he's still going strong. So age is absolutely not a factor. But he created a ownership of employees. He didn't take all the equity as a founder, but he created 15, 20 young employees when we were all 30 years, and he said that whatever you build, a part of it is yours. Created a trust, ownership trust, and really he gave that. But only thing he said that we'll have to create a frugal, setup, a company. So we were all getting 10% or 20% of what we could have got from the market, and we created a very frugal organization in terms of operating expense. And then once you reach 60, in the next 5-10 years, you will get back all the money. So he planted the seed of the entrepreneurship which was there. So we were, even though we were professionals there, we were also owners and we were entrepreneurs. We were building that company in spite of running a very difficult business model. It took about 20 years to convince the market. Then once I left that company, I wanted to be in the advisory with TPG. I was there. So to take it little slower and softer. But again, this opportunity came again from another private equity, where they said that you are not going to be an investor, you have to be an operator. So you are an enterprise runner, so you cannot sit and advise people and all that. So I felt that's right. So again, I have
So you weren't actively looking for something?
I was not actively looking, but I will not say I have not looked at completely zero, no interest. But it was there in my mind, but right opportunity should come. So
right.
Here it came, and fair to my owners, and they have given me free hand to shape this company. And so we did listing within 12 months. So now when we turn back, what's happening in the NBFC industry, financial services, so we think we are very fortunate to have listed this company. Though share prices are down, but at least it's listed, and we are very confident that once this turbulence will be over in next 1 or 2 years, there will be separation between men and boys, and the surviving companies will emerge stronger. So every turbulence, it happens in our industry every 10 years. 98, 2008, now it is 2018. For some reason, not relating to the companies involved. Today, whatever is happening is because of an infrastructure finance company, not an NBFC. 2008, it was West mortgage crisis. We were not at all involved. So unrelated, but we get impacted. But we are very confident that we'll come back.
So was the family kind of happy that you went back into this, or were they not so happy? Were they pushing you to get out of the house? And
now you can imagine, many of you will agree with me. After 60, if you sit at home, wife will never be happy. So my wife is very happy that you are out throughout the day, so that I am peaceful, and happy.
So when you come back home, you're tired, and she can give you dinner and send you off. Excellent. Okay, so I guess it's interesting, and I mean, I think there are, in my sort of scheme of things, there are three broad types of entrepreneurs. One are the early stage entrepreneurs or young entrepreneurs who pretty much out of school and college get out, or done only a year or two of work and have learned a little bit, or they feel they've learned it all and now they can go set up their company, whatever it is. That's the very young set of entrepreneurs, which are probably largest in number in the three categories. And then there is the third set, I'll come to the second, which are people like you, and there is a bunch of other people. Gunit was supposed to come here earlier for the show, and Sridhar very nicely, very sort of sweetly agreed to come here all the way from Chembur. It's his day off today, so it's not even that he's on company time. So there's a whole bunch of people who've gone back to doing it. And then there's the people in the middle who are mid-career, and I can see many of you here seem to be in that category of mid-career people. And it's very different for each of you. Naturally, for those in the very late careers, this is not a financial decision. This is not necessarily that I have to make, a whole bunch of money. You want to build, you want to create value, you want to be in the market, and you believe you can change things. So it would be interesting to sort of get that perspective, and I'll leave that to the Q&A if you guys have any thoughts or whatever. So think about that, and then we'll give you a little bit of time a little bit later. I want to move to a different topic, which is there is a lot of technology, and we've talked about it. There's a lot of things that are being done, both from a mobile, from the cloud, from IoT, and a whole bunch of other things, which helps our lending businesses, because you can do so many things that you couldn't do earlier. Today, you can put, you put GPSs on all your trucks, and you know exactly where they are. You can track human beings, all the buyers of the trucks or the borrowers, and so on and so forth. So there's a lot of stuff going on in that space. And then you build a very traditional company. Even at Indostar, it's a fairly brick and mortar, branches, that kind of a business, as opposed to some of the digital lenders. So the question is, do you think you should collaborate or compete with those people? I know that they're smaller and they're trying to grow, and it is possible that many of them will grow pretty large. There have been attempts at growing purely digital lending businesses which didn't grow very much, and most of them now have a combination of digital and traditional, if I may call it that way. All the players that started many years ago, the Capital First and Neo Growth and a whole bunch of others. So what do you believe, both from a market point of view and from an Indostar point of view? Are you looking to collaborate with FinTech players, or do you think that you should just compete? And your views on that?
Yeah, my view is, technology is very useful for every lending business. I agree with that. But when it comes to lending, there are two kinds of businesses are there. One is consumer lending. So that is, you zero in on a person and you give him everything he wants. So that's the main business people today do. So the consumer finance business you can do through digital. But when you move to the business which we are planning to do, which are asset financing, then there is an asset is involved. So you'll have to evaluate that asset, which you cannot do through digital.
Right.
So for example, if you are lending to a person for a personal loan, then you look at his KYC, you look at his credit score, and then you decide how much you want to give. You can deal through digital and you transfer the money to him. No need to even meet the person. But here, when you are giving to the same person a vehicle, then that's a commercial vehicle you will have to see. You have to value that vehicle. There is a registration issues are there. There are permits, where he is playing, viability, so many things. So there is a need for a human intervention. So without that, that kind of business cannot be done. So consumer business, it is possible to collaborate and do it. But in our business, technology is coming into it to help the business do better. Not the lending, but from the customer's point of view. For example, in our case, the truckers go to a broker. You will find in the lorry place. So they will provide loads from Bombay to Delhi. They will say that it is 1,000 rupees per ton. So 20 ton, 20,000, they will pay 10,000 rupees advance, and the balance you will have to take from somebody else. So there are human beings who are sitting there and doing it. That's being now replaced with technology. So you can use your mobile and see where is the load available,
Make it more efficient.
Yeah, so I need not daily fly between Bombay and Delhi. Suddenly, if Bombay and Chennai is better freight available, I have an option to change last minute and do it through technology. So technology plays. So I have myself invested in a couple of startups which were there in Bombay, but later they shifted to Bangalore.
Suddenly, there's a lot of years of sort of.
There is one such company called Porter, which has developed a technology. A 24-year-old IIT graduate started it, is doing it very well. A lot of investors have supported that company. Later on, after 1 year, he has shifted to Bangalore. So this company is trying to remove the human broker and introduce technology which is doing very well. There is another one is called Freight Tiger, which is also promoted by a very young person who is using technology to improve the trucking operation. So though it may not help me to lend money, it helps my trucker to do business better, which helps in my recovery, in his viability. So technology definitely plays an important role, but may not be in lending to an asset-backed funding. In the consumer, it's definitely possible.
So clearly you're in the collaborate camp,
Yes.
and you want to be able to find more. So hopefully some of you have opportunities that you can throw towards Sridhar. I'm going to try to make this a little bit fun for a few minutes, and then we'll do Q&A. I thought of a bunch of questions which are, not necessarily related to work, but more related to personal, and just to get your views. So I'm going to ask you sort of a rapid-fire set of questions, and you pick one or the two as an answer without thinking too much about it. Wow. And I'm trying to keep it relevant, but none of this is personal. I'm not putting you on the spot. But I know that your daughter is already married, so I said, okay, I can ask this question now. So the first question is, would you prefer a sedan or an SUV?
I prefer a sedan.
Sedan?
Yeah.
Okay. Would you rather go to the beach or to the mountains?
I neither go to beach nor mountain.
Neither? Oh, my question has failed. I naturally asked the wrong question. Maybe temples?
Not even temple.
Oh, not even temples. Okay. We have to talk more later. Do you think test matches or limited over?
I like test matches.
Okay, good. Me too. Would you recommend people who are starting businesses now to buy platforms and technology, or still do you think build is a better option?
No, it depends on the scenario. You can build as well as you can buy. It depends on the opportunity. For example, I am building commercial vehicle finance business. 2 days back, we bought a ready business, which came in our way. So environment, sometimes someone feels that it is non-core for him. It's a core for somebody else.
So you don't have a strong bias towards one or the other?
Absolutely.
No. Okay.
It's a completely situational.
Right. So this is a more personal kind of question, because you're a CA, your daughter is an MBA. In today's graduates, would you recommend doing CA or MBA? You have to choose one, and strongly agree to that. Stick with that.
It doesn't matter, because in my experience, I have always seen that the IIM people, IIM Ahmedabad or Chartered Accountant or something like that, has nothing to do with what you actually do. I have seen engineers, IITs, IIM combination have been complete disaster.
There's some in this room, I think.
In my experience. So some of the entrepreneurs who have made it really big have absolutely had no educational background. Even then they have scaled. It may not be in the financial services, but it has nothing to do with that. But if you have the qualification, it's okay. But that's not a must.
Yeah. Okay, so you don't have to. Do you want to do a few quick questions? The whole session, everything is running a little bit late. So we're at 12:27, so we'll try and take 3 or 4 minutes. That was the quickest hand that went up behind you.
Hi, my name is Fenil Gandhi. I had one question. You mentioned about maintaining client relationship, human capital was very important in your initial days. So how do you see it today with respect to new apps coming up and human capital getting dissolved completely, from being in touch with clients? So do you see that human capital is still very important for maintaining client relationships?
Whatever you do, if you do it something different which cannot be copied easily by others, it has a different value. You can still do what other guy does, but it will have a lesser value. So if you do something which another guy can do it easily, then why should someone give you value? I'm talking about market value of a company, which is determined by multiples. So there is an earning multiple, there is a book value multiple. So some companies are at book value, some are below book value, some are at 3 times, some are at 4 times. It's like you have a apartment next to NCPA, and then 1 kilometer later, you will have a slum. And then you will have another 5 kilometers later, you will have 50% of the cost. So value is depending upon what you actually do, which is unique. Other people cannot copy. So what we try to do is something unique, different, scalable, but still there are entry barriers where others cannot come.
So your idea has to be different.
Yes, your idea has to be different. Then it creates a lot of value, and there are a lot of investors there to support you.
So in terms of diversity, anybody from the fairer sex? Go ahead. I'm trying to be balanced.
Sir, I've followed your career for the last 10 years, last 10, 15 years. I've seen that in the businesses which you have asked, where you have dealt with, you have given a lot of weightage to human interaction over technology. There is a lot of conversation of the world becoming a digital platform, a digital world with digital transaction, digital money, FinTech taking away, many jobs, breaking, taking away brokers, taking away traders.
So what's the question?
So the question is, do you see a world where financing as an operation will happen without human intervention at all? Do you see a scenario ever coming like that to India?
Okay, so it's very similar question to what he asked.
Possible. It may take more time in India,
but
where we have a lot of population.
Just one additional actual question was to understand that we are putting, instead of creating more jobs by doing digitalization completely, we are taking away the jobs from so many people, so many aspirations. So we are creating more unemployability. What's your take on that?
Correct. See, India has got a lot of people whose livelihood is very important. That doesn't mean that we should not do any technology. But technology is being used by everyone. So in our business also, even though human intervention is there, technology is used, as I've outlined to you, in our information system, in doing businesses and all that. But what I am trying to say is, you can't just lend only with technology. If you have an asset involved, there are a lot of things. For example, if you are giving a home loan, then you need to do a lot of things. But everything is becoming digitalized. Maybe in 15, 20 years, if everything becomes digital, you can do it. But dependability of the data is what is very important. That credibility will take more time in India to come. Then you can trust the information which is available. Today, CIBIL is a credit bureau which gives you all the information about an individual. So if you have 600 and above number, then you are a good credit. People are ready to give you. So that credibility has come over 10, 15 years. So maybe 15, 20 years later, it should be possible.
Yeah. So I'll give you the last question.
Yeah, hi sir. My question was more about how you started, because when you started, most ideas people think what's working in the West and then they copy it here. But when you started, you just said that there was no such model existing even in the West, and there was obviously nothing in India. So what made you start lending to second-hand truck owners, which was, as it is today, considered risky? What made you start then? Number one. Number two, why did it take you 20 years, or why did that take 20 years for somebody to recognize this segment? And third is a slightly personal one, because I was working with Citibank for a very brief while in the commercial vehicles. Till today, nobody has been able to copy that. Even today also, Shriram Transport Finance is still the number one, in spite of having a success ratio and everybody now wanting to copy since the industry is validated. What is the reason for this?
See, that's what I told you. When we decided to get into this business, then we felt that we should focus on something where there is no credit flow. We didn't want to be one more to lend to the same person, creating competition. So our objective was, we were in a couple of businesses, but in every place, those days, I'm talking about late 70s, where there was no credit flow. So you go and address. That's how you got microfinance institutions in this country. There were so many microfinance came because there was no credit flow. So there are socially responsible organizations like what we have started, which came in and said that this industry, this segment is not attracting credit, so we should go and do it. So when you start doing that as an entrepreneur, you face a lot of problems. You don't get credit. Your perception is different. Your rating goes down. So you have to manage that. It took 20 years for us to change the mindset and start making a U-turn. So it happened to us. So, but fortunately, because of so many entry barriers, even today, that company is the leader and it moves up with the same speed. So whatever we try to do, whatever business you do, you should see whether there is any niche there, which other people cannot copy easily. So without an entry barrier, there will be 100 people and you will be lost. Because for every successful entrepreneur, there are 100 failure entrepreneurs are there. Those are all not noticed. Only the successful are glorified.
Some are in this room.
Glorified. But there are so many people who had the same dream, same conviction, but unfortunately they don't, they don't get success.
So I'll call 30 seconds. Your question can't be as long as an answer. Huh?
It's very small. My name is Sagar. Affordable housing is a very big story in the current scheme of things. Can FinTech play an important role to ensure that we can accelerate the affordable housing problem in India?
I doubt, because what happens is, again, asset is involved. The second is customer is also unique. So the mortgage is primarily in this country became successful because it was lent to salaried people. The salaried people had salary which is regular, and the organization where they work give a commitment that every month they deduct and pay. So for a lender, it became a high quality asset. But when you move to the affordable, you are catering to self-employed and assessed income category. For example, he could be a plumber, he could be a tea shop owner, where the income is not regular. So you have to make your assessment, which can go wrong. So there, technology cannot play a role.
All right, I'm going to close it here. I know there's some very exciting product workshop sessions right after this. I can already see a bunch of people here who are going to run those. I would just love to get a round of applause for Sridhar.
Thank you.
And thank you very much again. Really appreciate your coming here all the way. And hopefully we'll try to rope you into more things that you can help us in TIE with. Thank you very much.
Definitely. Thank you for the opportunity.
Yeah, thank you. We'll take a short 2-minute break and we'll be back.
Thank you, Mr. Sood. Thank you, Mr. Sridhar. On behalf of TiE Mumbai, I would like to appreciate our panelists and give them a small memento of appreciation.